Hello and welcome. Away from the tragic events still unfolding in Ukraine, financial markets have continued to adjust their expectations for economic growth. This is against a backdrop of continued disruption in global supply chains and elevated commodity prices. Chief among both investors and policymakers' concerns is the impact on inflation, considering the significance of Russia's role in global commodity supply, particularly raw industrial materials and core agricultural and energy commodities. In both the US and the UK, we've seen central bank policymakers continue on their path to normalising monetary policy. Both the Bank of England and the US Federal Reserve raised interest rates 0.25% in March, and it's clear that the higher food and energy prices will act as a drag on growth for the global economy, but also that central bankers will be seeking to manage the risks to economic growth, even as they take a more proactive approach to inflation. This is evident in the Bank of England's most recent communications, where a more cautious tone has been adopted, underlining the need to remain flexible in its approach and balance the risk between an elevated level of inflation near term and an economy that's already encountering headwinds to growth from rising costs for businesses and households. By moving interest rates earlier, though, than their US and European counterparts, the Bank of England's Monetary Policy Committee might potentially have bought themselves the opportunity to be flexible in their approach if required. In the United States, the March interest rate rise marks a long-expected milestone. In the post-pandemic recovery, the Federal Reserve unsurprisingly emphasizing the importance of bringing excess inflationary pressures to heel, with committee members indicating expectations for 6 further rate increases this year. Now, the Federal Reserve has set a clear expectation for a succession of rate rises in the coming months, having so far been patient in their approach, and in the wake of sustained supply chain challenges and further gains for commodity prices in February. But critically, the Fed was also at odds to note the current strength of the US labour market and its belief that policy normalisation does not need to come at the cost of materially higher unemployment in the medium term. So, given the upward pressure on inflation that the events in Ukraine will bring in the near term, central banks will continue to face a challenge in both forecasting near-term inflation and striking the right balance between ensuring price stability and sponsoring a continued economic recovery in the months ahead.